Good morning, this is Connor from 0DTE Traders here to present our market minute for March 12th, 2024. It is 11:30 and the SPX is trading higher, up 1% to 51.70. And the VIX, a measure of market volatility, is down 7.5%, near that 14 handle, so coming down to a pretty critical level. This is all in response to CPI data that came out at 8:30 a.m. Eastern time, so pre-market. It did actually come in hot, but our main concern as 0DTE traders is the market reaction function, and, well, it was a positive reaction. SPX up, vol down, and vol's the major variable, so we just use VIX as a proxy. It is a very telltale sign. Should you be buying the dip or not? And well, we were buying the dip, and I started buying in the pre-market. Reason being, I already have we were going over this in our morning meeting. But a key telltale sign is if the market gets a flush down and the VIX also moves lower in tandem, it's a buy. I play this every single time, and it works out more often than not. At least you get initial reaction, so sort of a bounce, where you can find yourself in profit real quick. On this occurrence, we obviously rolled over. We came back to the lows, bit of a double bottom here, and then a strong bounce. This was in the cash market. So I bought this. I also bought calls on this move lower, continuing to play the upside. And this was a pretty, I think, obvious setup to buy the dip. I mean, you had the gap fill, you had a trend line in play here, you had the big macro trend line not far below, and we were short-term oversold. Now, not really here on the SPX, but we are 5-minute oversold on the SPY, and if you drop to the 1-minute time frame, we are oversold on this metric. So it was quite obvious that we were going to see some sort of bounce. The magnitude of the bounce is always in question, and clearly this looks like it did print the potential low. I mean, obviously we could come all the way back down, break that, but the low might be in here for today. Also, there was not really a reason to, I would say, to short today. I mean, yeah, the CPI did come in a little bit hot, but there was no bearish signals. Vol got sold, continues to trade lower. Market internals were actually neutral here at the open. If you take everything on a net basis, mega caps were green. We were above our flip level, which sits at 50.95. Now, for those who aren't a member, the flip level is our transitional strike. When we're above the flip, buy the dip. Below the flip, sell the rip. And well, we're above the flip, so the probable outcome, the path of least resistance, is for the market to move higher and for those dips that get bought. Now, this is actually measuring dealer flows, right? So there's a reason why that dip is getting bought. Now, I'm not going to go into that in this video, but this is statistically based on supply and demand, dealer flows particularly. Now, what can we expect going forward? I think that's the big question here. Obviously, we had a pretty big rally. We're seeing VIX come down to that 14 handle. The thing with these type of days, right, this is a squeeze. And oftentimes, the squeeze can last all day, right? And you just, you get an initial squeeze higher, and then you sort of get a grinding, basing type action into the close, often closing at highs on these particular days. Now, what we want to see, where's my little chart? Let's see. Okay. This is 0DTE options volume, something we pay close attention to determine kind of targets, upper bound, lower bound. And at this current juncture, SPX trading at 51.70. We have 51.75 is the max call, 51.80, second. And then not a whole lot of volume above that. Essentially, if we want to see continuation to the all-time high of 51.90 or to test the call wall of 5200, we want to see 0DTE call volume build overhead and that max call strike to shift higher. That will give us an indication that short-term positioning is supporting a move higher. So as of right now, we're kind of near that max call strike, and we can see the market is somewhat struggling to push higher here. I mean, definitely due for a bit of a pullback consolidation, so this is most certainly healthy. But I would exercise caution playing counter on these particular days. I think obviously there's good risk reward if it works, and I'm in the camp here today. At least my base case is that we're not going to print a new all-time high. So I think 51.90 is going to hold. Nonetheless, it is clearly counter trend and should be approached with caution. I have two rules in my trading when it comes to 0DTE. Number one, never sell credits in a gap zone. Reason being is when you penetrate a gap, there's a high probability of fill, and I've just been burned too many times on it. So my preference when it comes to gaps is to play the fill or the gap fill reversal, which we essentially did here today and yesterday, actually. Number two, never trade counter to large moves in implied volatility. So just using VIX as a proxy, if we are seeing vol contraction, substantial vol contraction, IV crush, VIX down 6, 7, 8%. I'm not going to play counter to that. I want to be in line with those buy flows. Today, for example, playing the upside. Now, this can also work in reverse, right? So if the VIX is resurging and you're seeing an up move of 6, 7%, I'm not going to play against that. I'm going to be focused more on the short side. More often than not, the VIX will trend throughout the day, right? Whether that is up or down. So I always recommend being a little bit more cautious if you're playing counter to it. Now, this is one of my rules, although there are times I'll deviate from it, particularly when the VIX is coming to a key level or there's a reason for volatility to get sold or for volatility to get bid, etc. And I also like key levels. Now, I know there's a lot of, it's kind of frowned upon to do technical analysis on the VIX because it's naturally mean reverting, yada, yada. But I find looking at hold numbers for potential pivot points, it works quite well. Take yesterday, for example, that low, which coincided with a rejection here of the 16 handle on the VIX, right? VIX was up about 7, 8% yesterday. And then you saw that vol contraction and, that dip got bought, right? So let's just look at that real quick, right down to that 5100 handle. Now, I did not buy this because of my particular rules. So I was playing the downside yesterday, shorting the open, playing that gap fill that we just mentioned at the end of the day. So I still tried to stay in line with that initial move. However, you can see that when you do get that turnaround in vol, you could see a decent move. Now, this was more of a grind, obviously, on this particular day, but the contraction in vol provided that bid in the market, right? Because it invokes buy flows, right? Conversely, here today, same sort of thing, vol getting sold, invoking buy flows, but SPX is up at some resistance levels. It's up at the max call, and we're bouncing off that 14 handle now, right? So this is a point where you may want to be looking at counter trend trades right up in this area when VIX is coming down to 14 handle, but it's still counter trend. So you have to gauge the response, right? Are you going to see that resurgence in vol, or is it going to roll over? And it's going to be one of those days where it is just a grinding type action, right? And oftentimes on days like this, you tend to stay trading at extremes, right? Whether that be overbought, just sort of a grind, or oversold and just sort of a bleed lower. So point is here, be cautious if you're playing counter trend, today and, counter to large moves in IV. Sincerely, adopt these two rules. I think they'll save you a lot of headaches. All right, guys, that's all I have for you. If you're not a member and you're interested in learning more, you can visit our website at 0DTEtraders.com.